did. Ha. Um, and but did close back above it, finding some stability on the 6700 level or gamma neutral. Now, generally, tests of gamma neutral come with a strong bounce, which we'd seen previously. However, this is not. This is not that. This is not a strong bounce. So a little bit of weakness going into the middle of the week tomorrow. I don't think we have much on the data side. I think today had a little bit more data, like consumer credit and shit like that, which was way down, by the way. Um, which is probably not good for consumer consumption, but we'll see how that goes. Um, Tomorrow, yeah, I think just some ECB stuff in the morning, and then we get a bunch of Fed speakers. We do have later in the day, we have the 10-year auction, which is of some importance. And we have FOMC minutes immediately followed by Kashkari speaking once again. And then obviously the big man himself, Jerome Powell, speaking on Thursday. So yeah, a little action into the back of tomorrow's trading session, and then with the rest of the bigger data Thursday and Friday. Um, ES failed back below the week open and ended up closing below that as well. Uh, there is some support here around the 6750 level. However, failing to regain the prior week close, which is that green line here, could mean that we start to push down into slightly more bearish ranges after failing the new all-time high we set this morning. Yields down across the board today, with most of it in the belly. Dollar still moving up pretty aggressively, especially against the yen and the euro. Sterling too a bit. Gold moved up above 4,000, making a new all-time high. Silver sold off by about 160 points. Copper up, and oil continues to push up as well. We got NASDAQ leading the way to the downside after Oracle reported that they had lost $100 billion in NVIDIA Blackwell rentals, and so not making a profit off of their AI endeavors. We saw 1 and 3 month correlation both snap back pretty sharply from this morning's open, with that kind of consolidating into close, so a little bit of a break in dispersion. Commodities overall slightly up for the day. Bond volatility picked up pretty sharply alongside the moving correlation, I think up about 5% from yesterday. I don't know if that'll continue, given that yields didn't move up today, but maybe a little. Leverage on the carries still staying pretty elevated. Forward yield on volatility down a little bit from the peak of the day, but still up pretty significantly from yesterday. We got VIX, cash VIX up 5.62%, VIX 3 month up 3.09%, and VX up 2.84%. Skew is showing a little bit more demand for out of the money puts yesterday. Concentration risk is still elevated. And 50 stocks below the 50-day moving average are or both stocks above. Well, stocks above their 50-day moving average, still slightly less than the 200-day, and then the 20-day moving average stocks we saw decline a little bit yesterday. Fed fund futures still pricing about 2 rate cuts by the middle of next year, with pricing about a little more than 2 by middle of next year, slightly under 2 by March, and pricing about 0.15 by Jan. I think I actually need to back adjust these. That might be the problem. There we go. Not a lot of change in the 10-2. Big increase in correlation between VIX, cash VIX today with the move up in VX. Now negative 36% correlation. Still hasn't moved positive, so we got a long way to go there, but I'd imagine it would if we start to see more of a breakout in VIX. Leverage on the S&P fell overall using BTIC futures or EFFR futures, unadjusted interest rate. You can kind of get a pretty good idea of what leverage looks like on the S&P. And right now, leverage has been kind of falling off in a fairly consistent fashion since about end of September, so about the last 7 days, which is something we saw, back in April, when leverage, or March, I guess, when leverage kind of peaked out around there, roughly the same level, give or take. And then, we saw leverage start to decline pretty rapidly. We actually saw leverage fall off all the way into like June 12th, despite the market reversing before then. We didn't see a lot of leverage pick up initially on that move to the upside. Remember, it was largely driven by retail. Tech services, consumer durables, producer manufacturing, the big sell-offs today, with some normalization in health tech after it ran super hard last week. We do still see AMD moving up a bit, but it does look like the rest of the electric tech sector not doing so great, with most of them being losers. So we'll see if this sell-off continues. We are seeing some interest in consumer non-durables, a little bit in health services and commercial services. Financials look pretty stable for the most part. So is retail trade. So we might be seeing a little bit of sector rotation there into some defensives, which could be the start of some de-risking. Out here, we did make a new high, but that also got rejected, and so we will move that up slightly. And we're still looking for that break at 66.99. We did, however, test that level today before bouncing slightly. So if this bounce fails, and then we fail that level, that's the first step to a rejection. Obviously, we can't confirm that rejection until we get down below the 20-day moving average, but that's the first important level. Brings us back within September's trading range, and then we'd be looking down at like 6,600 for the next breakdown around the EMA 30. Yeah, I think Powell's going to say that the data dependency of the Fed is reliant on government data that is not being provided during the shutdown, and is going to make their path forward more difficult. I think that's exactly what it does, and they probably won't cut rates again this year if the government doesn't reopen. And yeah, I think that's bad, especially when we're pricing in like I mean we're pricing in roughly like 100% chance of a cut for October, and I think 83% chance of an additional cut in December. And if those snap to zero, that's going to be kind of ugly. Anyway, that's all I got for today. So thank you guys for tuning in. I hope you all made some money. I'll catch you later. Peace.